I'm Danielle Hale, Chief Economist at Realtor.com. I've just returned from the International Builders Show in Las Vegas, where I shared my housing outlook and insights on custom home building. In this week's video, I'm going to discuss the latest economic data, as well as mortgage rates, home prices, new and pending home sales, housing inventory, and most importantly, what it means for you. Revised data on GDP showed slower but ongoing economic growth in the fourth quarter, driven by consumer spending. Business investment slowed, perhaps due to election-related uncertainty. Moving forward into the first quarter, January data on personal income and spending showed upticks in both income and the rate of savings, while the Fed's preferred inflation gauge steadied. Combined with consumer confidence, which showed a third monthly drop in February, data suggests that consumers are growing more cautious over concerns about the outlook. Against a somewhat uncertain backdrop, mortgage rates eased for a sixth week, dipping to the lowest level of 2025, but they're still more than 0.5% above September's recent low. In housing data, Shiller showed that sales prices continued to gain between 4 and 5% to end 2024, even though home listing prices were flat to lower in this period. Strength was seen in New York, Chicago, and Boston, while Tampa saw home prices fall. A similar regional trend continued into February, with asking prices showing the most strength in the Northeast and Midwest. The biggest surprise from the Realtor.com February Housing Trends Report, however, was an uptick in price reductions as a share of active listings. We not only saw the highest share of February reductions going back to 2017, we saw a seasonally unusual increase in price reductions from January. Inventory growth continued, but newly listed homes increased by only half as much as in January, and weekly data showed softening new listings growth as the month progressed, suggesting waning seller enthusiasm. Among transaction indicators, new home sales declined in January, and pending home sales also fell. Both new and pending home sales are counted when contracts are signed and suggest that home sales or closings will slow in the next 1 to 2 months. While sales slowed across the board, new construction homes, which have comprised a larger than usual share of inventory and sales, outperformed. New home sales registered on par with the pace typical of 2022 and 2023, while the pending home sales index hit its lowest level since counting began in 2001, suggesting that this outperformance for new construction will continue. It's still very early in 2025, but the housing market is now really showing the slowdown we anticipated from the late 2024 surge in mortgage rates. The relief in mortgage rates that we're getting now is expected to bring some buyers back to the market, but home sales will likely not register this pickup until the late spring or early summer. One last note, many are curious about the housing market effects of changes in the federal workforce. We've not yet seen an impact, but given the recency of changes, I wouldn't expect to see anything in the data just yet. In the Realtor.com February Housing Trends Report, we ranked markets by the share of federal employees among all payroll jobs to have a lens through which to watch for changes in upcoming months. You can find all the details, including full reports and our housing data for download at Realtor.com/research. You can also follow us on X, formerly Twitter, for real-time updates and Instagram for graphics.